Urgent warning to all stock market investors.
This is pretty crazy. So Donald Trump just said that the tariffs on April 2nd will be more lenient than people think. What does it mean by that? What does it mean for your portfolio? This is what I'm here to explain. I'm going to take about 5 minutes off your morning. I'm not even in the office yet, but this is important. So let's get to it. So over the past 30 days, the market has been uncertain about where we headed. Let's put it this way. A lot of chalkiness, a lot of volatility. We're down 10% from the February highs on the S&P, down 5% in the NASDAQ just for the past month. It's been very unpleasant. And mainly it's been unpleasant because people are afraid about what these tariffs will cause. Potentially a recession, unemployment, GDP slowdown, maybe a full-blown market crash. People know that trade wars usually don't lead to good results. And that is true. Now, in today's video, what I want to do is I want to explain to you what I think Donald Trump means and what I think it will mean for the stock market. I'll give you 3 different scenarios that can play out over the next few weeks. So what I think he means when he says lenient, I think he means that instead of being punitive in these tariffs that he's going to impose on April 2nd, he's going to be more symbolic. He's going to keep the headlines, he's going to keep the clout, and he's going to keep the agenda talking about tariffs, but he will essentially drain these tariffs out of any real actual meaning. It's basically essentially a situation where he wants the attention and he wants the clout, but even though the headline will say that the tariffs were imposed, he's going to climb down the ladder he just gave himself. What this means, even though the headline will say tariffs are imposed, it's going to be exemptions, exceptions, maybe temporary exemptions, a lot of different ways. Maybe the tariffs will only be applied to certain products or not that significant. A lot of ways to keep the headline and not to say that you're canceling, but to completely avoid the problem here. And the problem being a trade war with the rest of the world is bad. And Trump doesn't want that. He wants a deal. So he wants to keep applying pressure on other countries, but he doesn't want to collapse everybody's economies with a complete trade war. Now, what I think is evident here is that the Trump administration actually is watching the stock market. And I know it's hard for us to believe because he said he doesn't, but look at the way I'm looking at this. Trump is now saying to himself, hey, the stock market is absolutely in shambles for the past 30 days. It's been ping-ponging left and right. Everything is going haywire. We have to stabilize the stock market. Why? Because when consumer sentiment comes down because of the stock market, when the CEO sentiment comes down because of the stock market, what it leads is that consumers are not spending and CEOs are laying people off because everybody's bracing for impact.
This is a real thing. It's called the wealth effect. It's called the wealth effect. So, for example, if I don't know if there's a good image to represent. There's a great image to represent it. Actually, that's a decent image to represent it, right? Imagine you look at your 401k, you look at your trading portfolio, and you're like, dang, oh, all right, this sounds great. Look at this. I just hit a new zero in my account. Oh man, I got, $100,000 more than I thought I would. This is awesome, right? And the only way that's happening is if prices are going up, by the way. Only price is paying. And then you feel like this dude right here, right? You got your beard, you got your glasses, you got all this cash, and you're like, let's freaking go. Oh, I could do that right here. By the way, I got these from, what is this? That Halloween store, Spirit Halloween, right? Get these, use these as bookmarks, pro tip, right? You're this dude right here. You're making it, yeah, off camera. Hang on. Try that again. Right? The wealth effect is you got your stacks of bills and you're like, let's make it rain. Let's go. Right? Making it rain all day because you feel wealthy. You're comfortable with spending more money. That is the wealth effect in a nutshell. And Trump's not stupid, right? I know a lot of people have lots of opinions about him, but you don't get to be president of the United States of America twice by being stupid. You don't have to become a multi-billionaire twice by being stupid. So take that as you may with the political aside, but here's the deal. If he can make more people feel more wealthy, then they will do more of this, right? They'll do more of this kind of thing. Oh, soaking up all those dollars. You know what? I think I need to go buy a new car. Take this and put it here. I think I need to go buy a new house. Take this, put it here. I think I need to go buy a new Rolex. Put it here. I think I need to go buy dinner at a fancy restaurant. Put it here. I think I need to go buy I think I need to go on a trip to Disney World. Put it there, right? That's the wealth effect. When you feel wealthy, you want to spend more. But if you feel broke, you log into your 401k and it's 100,000 less than you thought it was. You're not going to be going out and buying a pony, like Knight would say. You're going to be like, ooh, we need to cut back. Where are we going to cut back? Okay, first off, we're not going to Disney World this year. Second off, we're definitely not buying that new Rolex. My Timex, my Casio watch is working just fine. Just fine. And he's well aware of that. So I am sure, to Tom's point, I am sure that he is thinking, if the market goes down too much, that's bad for my legacy. Take it as you may, politics aside, this is what I'm sure he's thinking about. That's bad for his legacy. And it's also bad for the economy. So I am very sure that the last thing that Trump wants to do is have the market go down, because that's his scoreboard.
And if everybody's bracing for impact, eventually this will become a self-fulfilled prophecy and the recession is going to happen because of the bad sentiment. So the stock market can actually be a catalyst of a recession. So the Trump administration is now trying very, very slowly to slow things down and calm everybody. So they're not waiting for April 2nd. They're saying now, hey, folks, everything is fine. We're not going to go ham like you think we are. Essentially, this is the evidence that no trade war is absolutely going to happen here. Now, is it certain with Trump? Who knows? But it seems that the risk of a full-blown trade war is actually diminishing. Now, there's three scenarios out of this whole story. And these three scenarios are very simple. Scenario number one is where this whole thing is just a preview to complete kind of no disruption, zero tariffs, just the name stays. If that's the case, we have non-impactful tariffs that nobody cares about. Trade war is completely avoided. The market will have to reprice that whole risk, which will send the stocks up. Consumer sentiment, CEO sentiment is going to go up. The stock market is going to go up. On top of it, in the second half of the year, the Fed will supposedly cut rates, which will boost the market even higher. And the bull cycle will continue. This is the best case scenario. And this is what everybody's hoping that this lenient statement actually is talking about. Of course, there is the middle ground scenario in which this is not a complete cancellation of tariffs, but basically walking it back 50%, which means we will still have kind of this middle ground scenario where we'll have periodic spats between Trump and other trading partners. The markets will not crash. The economy is not going into recession, but it's going to be very choppy in stocks for the next 12 months, 18 months, and pretty much a flat market. Not a very pleasant environment to be an investor in, but nevertheless, it is what it is. Of course, there is the worst case scenario here, in which this whole thing is basically just words and empty statements, but on April 2nd, we'll have full-blown tariffs, and that's eventually going to spiral into a full trade war. Now, in a trade war, nobody wins, because as each...
I can't imagine that we'll actually hit a trade war. So let's do this in the chat. Type of number 1 if you feel like tariffs are going in on April 2nd. Type of number 2 in the chat if you feel like he's just bluffing. Type of number 1 in the chat if you really think that tariffs are coming through. Type of number 2 in the chat if you think he's bluffing.
Country ramps up its tariffs as an answer to the previous ramp up, this cycle never ends until everybody gets to a full-blown recession. And that's what happened every time we had a trade war the past 100 years. Check back history. This ain't new. Now, which one of these scenarios happens, we'll find out. I think that there is a high likelihood we're probably heading to scenario 1 or 2, complete leniency or some sort of a middle ground. I don't think Trump is intentionally trying to lead us to a trade war, because he is trying to get a deal done. And in that scenario, there is no deal. Everybody loses. So in our academy, just a few days ago, I did a whole lecture on how to prepare for this, how to set up your portfolio, how to have a whole kind of basis of protection against this. I highly suggest you go and watch that. If you haven't joined the academy yet, you're more than welcome. patreon.com/Tom. Nesh, sorry, forgot my own name. I'm going to put the description and the link and all that stuff. You can go ahead and watch it. But essentially, what this is basically a little lesson in the many, many times I talked about this. Volatility is normal. It's inevitable. It's like the sun. It's like the moon. In the past 15 years, the stock market has seen a lot of reasons to sell, a lot of mess, a lot of chaos, a lot of crisis, a lot of wars. But nevertheless, every time we zoom out, we find out that over the past 15 years, the S&P 500 still did 700% with all those reasons to sell. And the reason is because the corporate world is adaptive. If tariffs come around, and it's not a full-blown tariff war, trade war, then in this scenario, companies will adjust. They'll find new supply chains. They'll adapt. They'll work around this. Eventually, they'll find a way to exist in this environment. The power of compounding in the stock market over the course of 10, 15, 20 years is undefeated. And this tariff thing is just the latest drama in a series of many, many dramatic events in the past. None of them have ever broken the stock market. I don't expect this to begin right now. Now, if you're very young and you're a long ways from retirement, there's nothing for you to worry about. You could just stay in the market and basically eat popcorn and watch this. If you're a little bit older, then in that case, you need to rebalance your portfolio anyways, because your portfolio is currently not set up for this. And this is just one of many, many events that can push the stock market down in the short term. If you're closer to retirement than 10 years, 20 years, you have to look at how you're setting up your portfolio. You have to look at diversification. You have to look at allocations. You have to look at insurance. A lot of things that you have to address if you are closer to retirement than somebody who's in their 20s. Of course, these are all things we teach in the academy. I told you, patreon.com/Nash. This time I didn't forget my own name. It's on the description. It's in the pinned comment. In my opinion, the best thing to do right now, because we don't know what's going to happen. We don't know what Trump is going to do. We don't know how the tariffs.
To this point, exactly. We don't know what's going to happen. I don't have a poll. I wish we could run polls. That would be cool. Megator, what are you doing? 3's not even an option. Mark, what does that even mean? But I saw lots of 1s, lots of 2s. And to this point is we have no idea, right? We don't actually know. But here's what we can do. We can create a trading plan ahead of time. Know what we'll do if an entry signal is hit. Know what we'll do if an exit signal is hit. In the meantime, just sit on our hands. Sit on our hands. My new thing this week is no mo FOMO. Okay? Do not FOMO into anything, any trade. Anything on any trade, right? I think a lot of people were FOMOing into the market thinking, oh, here's the bottom, right? I think a lot of people, no offense, Mr. Baggins, I think a lot of people FOMO'd into AMD thinking, oh, there's the bottom. Jeremy's a genius, right? And while it was a bullish trend right here, 10/20, price over the 50, I will absolutely concede that. I said, watch for this order block and trends can change. You're never going to hear me predict anything because I don't have to predict anything. Right? I don't have to predict anything. Just need to be aware, and you can take any stock on any day and you could get into anything, even PayPal. Even NVIDIA. Oh, remember when NVIDIA could only go up? You can get into Meta. You and Mark Zuckerberg can be best friends and you can invest in his company. But just know how much risk you're willing to find out if it's going to work. That is the important thing in the game. Know how much room you're going to give that. It doesn't have to be the same as me. But it definitely shouldn't be the same on every stock. Right? If you got a really boring stock with a small ATR versus a really exciting stock with a big ATR, you don't need to be trading the same position size. You need a position size based on volatility of that stock.
It's going to look like until April 2nd, we're all just guessing what might or might not happen. So in my opinion, this is one way to handle this, to stay diversified, to remain long-term oriented, having a long-term horizon, and to make sure you continuously dollar cost average into the stock market. And if the market has choppiness, like the one we've seen in the past 30 days, you can double down into your favorite stocks and ETFs. Uncertainty is opportunity. It's always been like this. If you're a long-term investor and you're not trying to time the market, which is a very, very dangerous game, and it is a stupid game, which means you will win stupid prizes. If you are trying to just remain in the market, which
I guess I won a 92% return last year with the stupid price. I'll take that stupid price every day, Tom.
is the smart thing to do, look at the past 20 years. If you've missed the top 10 days over the course of the last 20 years, that's 1% of days. Your returns from the past 20 years will be slashed by 50%. If all you do...
I don't like this stat. First off, show me receipts, please. But we've talked about this before. During the COVID crash, one of those days the market was up 11%. So you're telling me that as the market went down 35%, there was one day where it peaked up 11. And if I were invested, making sure I was in on that one day, my returns would be twice as high. Give me a break. No. Don't stress on that kind of stuff, right? The market will tell you exactly where it's going. You just need to know how to listen, right? You need to know how to listen. You need to follow the outlier trend template. The 10 over the 20, price over the 50. You follow that, you're going to be in the right direction of the trends. And then you throw in some red light, green lights, right? If it crosses over the 10, consider that a green light. If it crosses under the 10, consider that a red light. And I'm telling you, because it's math, you will avoid big drawdowns. Meta, right? This move up, round trip right back down. What happened? Green light right here, red light right here. You got to keep most of 90% of those gains right there. Then here's the other thing. You can get back in later. When it starts trending back up, you can get back in later. I'll tell you, I have the mostest paperist hands of all time. I'm a paper factory with my hands. And that's what allows me to stay in the game.
Do is remain in the market. So the whole thing doesn't really matter. Obviously, it's unpleasant in the short term, but as a long-term investor, all you got to do is remind yourself, hey, this is not our first rodeo. The economy will not be broken by tariffs or trade wars. We've all been through this before. Zoom out, relax, and just stay the course. I'll see you next one. Peace.
All right. Not a bad video from Tom. Now, we no longer rank videos because I felt like a mean girl ranking the videos. But you know what? I'm just some random guy on the internet. How dare I? My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, wait a minute. That slide was supposed to go. We're not ranking videos anymore. There you go. Together as a team. Now, I want you to subscribe if you haven't already. And let's shift gears and let's go to today's member highlight. All right, so Red Rocket, if you're watching live, because you said you were, are you there, my friend? What's your avatar? It's so hard to keep people's names the same. Red Rocket says, "Hi, Chris. Would love to hear how you would set stop losses or limits on options. They fluctuate so much and don't always trigger my stop limits. But I don't trust stop losses with options because they're market orders. How would you do it?" So, excellent question. Let's start with the definition of a market order versus a limit order. A market order, which, let me tell you a story. I was trying to get out of a trade one time. This was earnings on Akamai, AKMI. It was Akamai. And I had traded an iron condor. Details don't matter. The point is, I was trying to get out of the trade and I couldn't get filled on my limit orders. And I kept mashing down the price, mashing down the price, mashing down the price. And finally, I'm like, oh, F this noise. I'm just going to do a market order. I did a market order and a trade that should have comprehensively been a winner. And I was just pinning it down, trying to make sure I got as much as I could. Comprehensively been a winner. No doubt, hands down whatsoever, should have been a winner. Was a loser. And I'm like, what? How did this just happen? How in the world did my winning trade turn into a losing trade because I changed it to a market order? And that's because with a market order, it takes the very next available fill price. So, for example, let's look at SoFi. Let's say you had a market order to buy SoFi at $13.15. Market order, give me SoFi right now. But it ends up going in at $13.35. Dude, what the heck? I don't want to pay $13.35 for the stock. I only want to pay $13.15. That can absolutely happen. Absolutely happen. Or the opposite's true, right? You just had a winning trade and you're like, oh man, I can't wait to get out at $13.35. Market order, get me out of here. Boom, $13.15. Wait just one cotton pick a minute here. I see right here that I can get out at $13.35. Why am I now at $13.15? I just lost 20 cents a share on this. That's because they took the very next available order for you. And that sucks. So first off, never through the history of time should you use market orders. From this moment forward, if you're ever doing market orders, do not do them. Now, what is the difference in a market order and limit order? A limit order is where you can decide, hey, I want this price or better, right? So if I'm buying SoFi and I say I want to buy it at $13.15, it sits there for a moment and then it gets filled. It's going to be $13.15 or better, meaning less, right? Because I'm buying it. I want to pay for a little as I can, right? I might even get filled at $13.13, $13.10, $13.05. That's called price improvement. That's a great thing, right? Brokers who actively want to give you price improvement are the brokers you want to work with. Brokers like Robinhood who will skim you on that. And they're like, well, we could have given you a $13.15, but this guy over here was selling it for $13.10. So we grabbed it at $13.10, then sold it to you for $13.15. Google it. They do that. It's a real thing. And it happens in an instant. You don't even know it happens. That's the difference between a great broker and somebody like Robinhood, a discount broker. So point is, a limit order, you're going to get in at your price or better. A market order, you're going to fill wherever. It could be great. It could be horrible. Now, when the question was, how do you set stop losses or limits on options? I don't. So let's say I'm in SoFi. Let's go look at SoFi. Let's go look at SoFi. Let's say that I want to buy a call. Let's say I want to buy the 10 call. Right, the 10 strike call. I'd have to pay $3.25 for the privilege to buy the $10 strike call. Now, if I were to set a stop limit, let's say it's 325 right now. We're going to use some round numbers here. And let's say that I don't want to risk all that much. So I'm getting in at 3.25, but I want to get out if it goes to $3. Cool. 25 cents, right? 25 cents in risk. Putting this in, right? A stop limit in, it will be filled if the price goes down to $3 or less. And then it turns into a market order, as what Red Rocket was asking, and it immediately gets filled. So even though you say, hey, I want to get out at $3 because I only want to lose 25 cents, it gets down to that $3 level, turns into a market order, and then gets filled to 288. Bro, what the heck? Can that happen? Abso-freaking-lutely. Now, for this reason, I do not use stop losses on any options. Not only that, but these can widen. And in fact, if you look at this after hours, this same 10 strike call right here, instead of being 5 cents wide, it might be 40 cents wide or $1 wide. And then after hours, it's going to look like, hey, this is going to trip as a loser. And then here's the crazy thing, and this has happened to me before. The market opens the next day. It still hasn't contracted the spread back to be a nickel wide. And then my trade's taken off. And it's like, what? No, stop. Wait, what do you mean? What? And it's because the systems recognized, hey, you know what? It's less than $3. We got to go right now. And there was absolutely no reason whatsoever to take the trade off. Not at all. Except the spread on the bid and ask had widened out enough to where it tripped it. It tripped your order and you're out. So for that reason, never do I put in stops in the market on options. Never put stops in the market on options. Just what I do. You do you. You do you. But I like to share my examples, so hopefully you can learn from those and you don't have to pay the same lessons that I did, right? Right, Gene? Never, never, never market orders, right? Had a little light bulb moment going on for Hopecast. Good to see you, my friend. Wealthfront skims too. We will book the trade in the next hour. What the F? Yeah. Jennifer asks, what trading platform do you use? So this is Tradier. We actually have a really sweet deal. If you are an Outlier customer and you open a Tradier account, they'll actually refund you $150 into your account. Go check out all the terms and details down there. But it's a really sweet deal. It's a really sweet deal. So Red Rocket, I don't know if you're here. I hope you are here watching live. And I want you to know, I really appreciate the question. So I'm going to do my best to start answering more questions here in the Discord. So if you want me to answer your questions, it's super easy. Just go over to the Discord and drop in questions from you. Now, of course, I won't be able to answer every single question, but I'll do my very best to help you out there. So I hope that's all right with you. I hope you don't mind if I over deliver, because I want to make sure every single live stream that we put on is better than most people's trading courses. So be sure to share your stories and questions in the Discord. And of course, if this helps you out in any way at all, the way you can pay me back is by telling everybody you know about Outlier. And of course, you can hit the like button too. Now, back to trading in the Outlier trading room. Real quick, what is Outlier and what does it do? How does it work? Old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And if you're ready to save time, make money, and start winning with less risk, you can head on over to outlier.com and get the annual pass for just 82 cents a day. That's 64% off the regular monthly price. And if you're on the monthly plan and you're ready to upgrade, we now have a simple one-click upgrade right now and save 64% off button. So my style of trading using the Outlier is called the Golden Ticket Trading Strategy, and only price pays. So let's take a look here. I want to see the 10 under the 20, price under the 50 on the SPY if I'm going short, which we have. We have this, right? 10's under 20, price under 50. And it's been that way for a hot minute, all the way back since February 27th. So a full month now, we've been in a bearish trend. Next, market breadth. Market breadth. Let's take a look over here. So if we scooch this over and then add the 10 EMA, this is how I would look at it. The green line measures the percent of stocks on our bull list, the percent of stocks with buy signals. And this is crazy. This has been going up like gangbusters lately. Reason why, I think, is a lot of short covering was happening right here. Now, this divergence between price going down, market breadth going up, is one reason why I have not taken any trades in a hot minute. And I have no FOMO because there's no reason for me to. There's no reason for me to. In fact, for me, this locks me out of the master key. We still have a sell signal on the SPY. The market trend is still bearish. Market breadth is bullish, and the sectors are going to do what they're going to do. I don't even look at sectors until I have at least this master key part unlocked. So for me, I don't have any trades that I'm going to put on today. And that's okay. Like I say, no mo FOMO. Never again for the rest of your life. No mo FOMO because you have a trading plan. But I also want you to tell me in the chat what you're trading right now. So hurry up and do that. Put in the chat right now. What are you trading today? And let's take a look at it. Now, be sure you put in the name of the stock and if you're looking long, or the name of the stock and you're looking short. Tell me what you're looking at today. Who's going to be first? Bender, you didn't put long or short. Dot didn't put long or short. GM long and NASQ. All right, let's go to the dashboard to GM. Now let's do GM. Now, of course, as we go through this, keep in mind, the market is weak right now. Because the market is weak, all of these stocks that are long are going to have a hard time overcoming the fact that the market is dragging them down. And then the sectors, they're not so strong either. So 40% of the stocks moves due to the market, 30% due to the sector, and 30% just the stock itself. So a NASQ, taking a look at this. Dude, not bad. Not bad. We got a buy signal. We have the 10, 20, 50 crossed up. That's why we have a green overlay right there, a green uptrend overlay. Then you've got the fear and greed heat map moving up. Oh, actually, Mahesh told me this morning. He's like, Chris, it's right there. Current value on the fear and greed heat map is at 59.84. So that's looking great. A new one of the new things that we're doing really soon is it's actually going to show the sector value. And then it's going to show if the master key is unlocked for all of these. So it's going to be so cool. I can't wait to show you that. But anyway, fear and greed heat maps at 59 and rising. And the discretionary sector also looks like it's losing some fear, starting to head towards greed. So in ASQ, that one's not bad. GM doesn't look bad at all. Let's double check for order blocks. No order blocks up here until 55 or so. Now, here's a red flag for me, my friend. Here's a red flag for me. A close under the prior day's low is not bullish. I'm not saying that's the end of the trend, but a close under the prior day's low is not bullish. In fact, on my exit signals, a close under the prior day's low, once I've rolled it, once I've established I've already taken some partial profits, that would be an exit signal for me. That would be an exit signal for me. However, if you have not rolled your options, you could definitely still hold it. Just be aware that is not a bullish sign for me. So great one there. Jesus wants to look at Intel long. INTC. All right, Jesus, we got a buy signal here. It's come down, but it's also come right back up. And it had a peak on that heat map at around 87. Super, super greedy. Came back down, and now it's starting to get more greedy again. Current heat map values at 64. The tech sector is moving a little bit less greedy, or I'm sorry, a little bit less fearful towards greed. So far on this side of the chart, doesn't look all that bad. Let's go look over here, see if there's any order blocks, which soon will be coming to Outlier. We do. We have a couple overhead order blocks. Check it out. This is going to be some work to get through. You actually have a double order block right here. And a close under the 10 EMA, that's an exit signal for me. So keep your risk in check, my friend. Oh, this is great. Deep Thought wants to look at spot short, or Anthony wants to look at spot long. See, that's what makes the market right there. That is how the market works. We've got people who are on both sides of the trade. So I'll be objective. I'll be your third party because I have no horse in the game, and no horse in the race, no skin in the game. So it means no horse in the game. Let's go take a look at this. All right, first off, we're looking at spot objectively. Has a buy signal. Moving up. Current heat map values at 58. So that looks good. Communication sector getting less fearful, moving towards greed. That looks good too. From just this, looks pretty good to me. We're also within an uptrend right here. Your 10 over 20, price over 50. All that looks sharp. Let's go check for any order blocks. No order blocks right there. But this is an exit signal. This is a red light. This is a red light. You still have 4 minutes left in the day. If you want to know the God's honest truth, that's a red light for me. Doesn't mean that it's going to crash, but a close under the 10, especially a close under the 20, that's a red light if I'm holding it long. Now, if I were looking short, I don't have a bearish trend set up yet. And the stock itself is getting more greedy. The sector is getting more greedy. So I would be looking for an exit signal here rather than a short signal. Steve Jones got monkey hammered on Spotify long today. You got what? It's been a minute since I got to do that. Oh, Michael. From the back. TD long. Ooh, look at that. All right. Buy signal just yesterday, it looks like. Getting more greedy. Financials getting less fearful. So all of this checks out. We're in a bullish trend right here. Look at TD. See if there's any order blocks. No order blocks until 63. Little bit of percent. How much percent is that? 4.5%. I'll take it. Michael, I love it. I love it. Just make sure you understand where your risk is at and know that the market weighing down is going to weigh this one down too. If the market were strong, this would be even better. Chris, do we have access to the chart you use? So inside of Outlier, this is the exact same platform that you would have access to. Now, like I said earlier, we are actively on a daily basis working on getting the new charts integrated. Once we get the new charts integrated, they will have order blocks and they'll also have like drawing tools on them, all kinds of cool stuff. I use TrendSpider, but you do not need TrendSpider. TrendSpider is hellaciously expensive. You do not need TrendSpider. Great question, Peter, and I'm glad you're here, my friend. Johnny says the price on the candles doesn't seem to match up, and that is true. The today price on the candles they actually get painted yesterday. That's why you're not seeing that up to date. Hopefully the new update will take care of it. Let's see. Imran. So let's look at CAH long. CAH. All right. Buy signal here. Getting greedier. Looking beautiful. I love this so far. The healthcare sector getting less fearful. So far, I'm loving it. Your 10, 20, 50. It's all across north. I'm loving it. Let's go look at CAH over here. Boom. I love it. No issues at all for me. No order blocks on top of it. Is this a new all-time high? It's at least a 52-week high, multi-year high. Going to new high ground. Here's a little lesson we'll do real quick. Steve is also in CAH. Yeah. All right. So here's the deal. When you see a stock that is actively moving higher, 52-week high, new all-time high, whatever, right? That means somebody in the last year, or let's just say for all time, I'm going to say for all time at this point. Basically, if you've bought CAH at any point in the past, you're now feeling that wealth effect, right? Remember the wealth effect earlier? This guy, right? He just got paid because he's looking in his bank account. He's looking in his broker and he's like, oh, let's go, baby. Let's go. I have never had so much money in my account today, thanks to CAH, because it's going up. It's setting a new high. That is really bullish. That is really bullish because more people want to have that euphoria, that excitement. And they're like, well, daggum, I want to have the wealth effect. I need to go out buy CAH. And so buying begets buying, and it moves up higher and higher. Now, let's see where we're at on the fear and greed heat map. We're at 61 today, so it's not super extended either, right? If that pushes up 70, 75, 80, I would start to get more concerned. But right now, CAH looks like a beautiful long, despite the fact that the market is weak. This is what's called relative strength. When you find a stock that's incredibly strong, right? You find the Arnold of stocks while the market is looking like Family Guy, Peter, what's his name? Peter Griffin from Family Guy. And the market's looking big and fat and sour. And you got Arnold in your corner, bro. This is like Apollo Creed. Let's go. Let's go. So hope that was useful. Hope that was helpful. Listen, if you are an outlier of any size in any niche, we really do want to work with you. We have some ideas on how we can start working with influencers of any size, and we want to pay you. So shoot us an email over at support@outlier.com, and I will personally reach back out to you with the details. and really looking forward to working with you. So be sure you come back tomorrow, where outliers like us will save time, make money, and start with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of these two. I also recommend you have a fantastic afternoon and come to tomorrow's live stream. We'll talk soon.
10 over 20 over 50.